QDTE stands for the Roundhill Innovation 100 Zero Days to Expiry Covered Call Strategy ETF. It began trading on the 7th day of March in the year 2024. It is designed to give investors income from selling very short-term options on a tech-focused index while still capturing some of that index's price performance. QDTE holds synthetic exposure to the Innovation 100 Index, an index tracking 100 non-financial companies listed on the Nasdaq, focused on innovation and growth. Instead of buying the index directly, the fund owns deep-in-the-money flexible options paired with out-of-the-money 0 days to expiry call options on that same index. Each trading morning, QDTE sells a call option that expires that evening. The fund keeps the premium from that sale and distributes the income weekly to shareholders. This structure means QDTE gives up some of the upside in exchange for steady income. But by using the 0 days to expiry strategy, it captures a unique edge in selling options that are close to expiration, often earning richer premiums, assets, costs, and liquidity. As of late June 2025, QDTE manages approximately $762.6 million in assets under management. Its gross expense ratio is 0.97% annually, typically reducing to around 0.95% after fee waivers. The fund is highly tradable, with average daily volume around 450,000 shares and a tight bid-ask spread near 0.1%, weekly income and yield. QDTE has drawn attention for its very high yield. The most recent distribution was around 21.5 cents per share. Across 52 weeks, total distributions amount to about $14.74 per share annually. With shares trading near $34, that computes to a staggering 42.9% annualized yield. Market Chameleon shows a trailing 12-month yield of approximately 41.8%. ETF Database and Nasdaq agree, reporting an indicated yield around 44% and confirming distributions are treated as return of capital. This means QDTE pays a weekly income far above typical ETFs, but that income can exceed actual earnings, drawing from NAV via return of capital. Performance and total return. QDTE has outperformed its index in total return terms since inception. As of September 30th, 2024, it returned approximately 13.6% based on both market price and NAV, while the Nasdaq 100 index returned about 11.9%. YTD performance as of early June 2025 shows modest gains around 0.5% compared to benchmark returns near 2%, volatility and risk. QDTE is riskier than its headline yield suggests. It has extremely high daily price fluctuations, with 5-day volatility near 47%, 20-day at around 13%, 50-day at about 22%, and 200-day volatility near 27%. It remains sensitive to sharp market movements despite the income cushion, tax treatment, and distributions. Because QDTE distributes more than its earnings, most payouts are considered return of capital rather than income. That lowers your cost basis and defers taxes. However, when you sell shares, you may have a larger capital gain. Weekly distributions are taxed as ordinary income or ROC. This makes QDTE best suited for tax-advantaged accounts. Trade-off summary. Upside participation is capped daily due to sold calls limiting gains during rallies. Downside risk remains full. When markets drop, QDTE falls too. NAV erosion is possible since income may exceed actual ETF earnings. High turnover and complexity from daily option sales increase operational risks. My meter rating. Income, 5 out of 5. The yield is one of the highest available. Growth potential, 1 out of 5. Upside is severely capped by daily call sales. Volatility management, 1 out of 5. Despite income, price can swing wildly. Tax efficiency, 2 out of 5. Heavy ROC use complicates taxes unless held in retirement accounts. Simplicity, 2 out of 5. Underlying strategy is complex and not suitable for all investors. Total score, 2.2 out of 5. Is QDTE right for you? QDTE may suit investors aggressively seeking ultra-high weekly income and willing to accept dramatic market swings, NAV erosion, and tax complexity. It should be held only in tax-advantaged accounts. If your goal is full participation in Nasdaq upside or stable growth, a direct index ETF like QQQ may be a better fit. If you have any videos you'd like me to cover, say it in the comments below and I will break it down in plain English.